Welcome to Soaring Profits. My name is Patrick, and I have my partner here today,
James.
Pleasure to have you. And what we're here today talking about, like a few of our other videos, is we're talking about social trends. We're talking about the environment of the day. And one of the things we talk about and we get asked all the time is now the right time to be buying a house, waiting, or what to do? And some of the last little bit here, we've been showing what the market tells us. And actually, we can learn a lot from the market. When the market is telling us certain things, we realize that it's a time to buy or it's a time to hold back. So what I've got pulled up here on the main board is, if we can look at this, this is the 5-year trend of the Vanguard real estate ETF. A lot of fancy words, lots of crazy stuff. It looks like nuclear physics, right? It's not super easy, okay? So Vanguard is an ETF organization. Some of you folks might have Vanguard within your mutual funds from work, some of your stock holdings. And this one here follows the US real estate market, okay? So what this is this is an ETF. It's an electronically traded fund that mirrors the strength of the US housing market. So as we look here, this area is called price action. So this is the actual price and the market trend that we're seeing in housing, okay? So if we look back here, this is a 5-year trend. This goes back all the way till April in 2017. And what do we see here? We see what us analysts would call consolidation, okay? A lot of sideways trading, little influxes, little movements, okay? What do we see here? We see a downtrend, and this is going into 18, okay? This was what we thought was going to become the beginning of a recession, okay? We were starting to see with Donald Trump as the president of the United States, we were having some housing issues. We were seeing some inequality, and we were starting to see some market pullback. What we did is we ended up having the Federal Reserve Bank step in and say, okay, we need to lower our interest rates. What did that do? Lower interest rates stimulates home growth and home purchasing. We had a recovery. Odd that we recovered right back to the traditional highs, right? High, 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 low, 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 right? It's odd that we made it almost back to exactly that. Okay. What we see here is, again, we see consolidation and then a move up. As we get close to here, what do we see before a big fall? We see a peak. We see the high, right? What is this? Why do we see such a drastic movement? Let's look at the date of that. That is March 2020. What do we all know happened then? Right? That was when COVID hit, right? This is when COVID steps in. And this creates maximum fear. Nobody's leaving their house, let alone selling their house. Okay. So what we've seen,
the time, I know that house realtors were like trying to figure out, well, how do I show a house without having people come physically in? And that's when they started doing virtual tours and stuff like that. And there was a learning curve that realtors had to get through. And that was that I bet that period of time, because I know some people I know actually bought a house without ever walking in because the realtor took them on a virtual tour. And, you know, you and I, when we were doing renting, we could do a virtual tour to show people so we didn't have to meet with all of them.
Right. Yeah. So a great example of that is a great company that's a publicly traded company. It's called Matterport. And Matterport created a 3D technology that now actually is just run off your iPhone because it has a LiDAR technology, but had a camera, which was a 3D camera. Your photographer would place it on a stand in the home. Anyone that's looked at an open house via the internet over the last little while has likely seen Matterport technology, but they've been able to map out entire homes, entire neighborhoods, construction. Matterport's a really interesting company to watch in the long term here. So what we're seeing here, going back to this, we see this collapse. These red and green bands, this is an algorithm from an organization called Lux Algo, fantastic program. This is a pay-for-service program, but it gives you these bands of strength and resistance. This is your support down here, right? As you get lighter and lighter and lighter, it is more and more oversold. Remember last time we had a conversation in our other videos about the RSI, relative strength index here.
Right.
Anything under this line is oversold. Wow, did we ever get oversold at COVID, right? And anything above that line is considered overbought, right? So as we can see here, we hit the overbought actually before COVID. we're into this red zone here. We flash the Lux Algo sell signal, would have picked it up a day or two early or a day or two late if you were charting this for that purpose, but you still would have got out in around this range before the catastrophic fallout. Okay. Then we have the consolidation sideways, and then we have seen a crazy run up. So this, if you take this time period here from March until we started to, hit some consolidation period, was August and July. That's the summer. Remember, we were 2 weeks to flatten the curve, right?
Right.
What we're saying here, folks, is that you're charting the markets gives you insight into what's happening around the world. This told us here that people believed that we were only going to be 2 or 3 weeks to flatten the curve. They were starting to buy homes again. The world was getting back to reality. Okay. What happens here now is we realize, holy crap, we're not getting back to reality. We don't have any supply. Prices start running. Okay. The issue is now is that we've gotten to a point here where we are well over our historical highs of pricing. But what did we see here? Where did our big pullback come? This goes back to January, December and January. Okay. What did we see from the Federal Reserve Bank of the United States and the Bank of Canada? They said, we need to worry about interest rates. Inflation's crazy. Oh my gosh. And what did they do? They created fear. So that fear has pulled pricing down. Okay. But now what we're going to do is we're going to use our charting techniques that we have here to be able to try to predict. It's not always perfect, but you can start to predict when and where pricing is going to max out. Okay. So this is where we're at right now. So let's draw this out a little bit.
But what's that line saying?
So that is where we've seen support and resistance in the past.
So you're saying like it's the height that has happened most often in that period of time.
Yep. So you're going to
That's what you mean by resistance.
Right. So I'm going to come down here and I'm going to get open and close candles and I'm going to draw our support all the way up here.
And support is the bottom that it hits.
Exactly.
In that same period of time.
Right. And what we're trying to do is we're trying to join as many of these touch points on the map as possible. Okay. And we're going to do a top because this is the height of the pricing, right? So we are going to try to join as many of these touch points as we can to give us a price indicator. Okay.
So you're bouncing between the low and the high. That's what those two lines are doing. The most often that it was low at the same kind of consistent rate, and the most often it was high. And that gives you that parallel lines.
You got her. So what we're doing here is we're creating this charting that allows us to create.
Your chart has disappeared, unfortunately. We're still working on the tech here. I apologize.
There you go. It should be back there now.
Yeah, it's coming back.
So what we're doing here is we're creating. Did it come back up?
Yep. We're good to go.
So we're creating this path, and these create trend lines of where we are. Okay.
Mm-hmm.
So when we draw these out, we can see that over the last little period of time here, and it might not feel like it, but we've actually dropped into a period of time that has broken this channel of price increases. Okay. Now, folks, you probably haven't noticed this in your family homes, whether you live in Toronto, whether you live in Calgary, anywhere in Canada, really, our market has not cooled. We are accelerating in pricing. We're seeing bidding wars. We're seeing all these things. What I'm saying is that now we have to test this bottom trend line, which I think we are going to test, and I think we are going to pull back. Now, it's not going to be in this week. It might be.
What do you mean by testing that bottom trend line? So the bottom is the lowest that market line has been.
Right.
So
on an upward trending session. So the pricing has to get above the previous resistance. So that was our previous resistance.
Right.
This was previous resistance. Okay. Then it became support. If this had bounced off there and kept going, I would say, hang on to your britches, folks. We are in for a market that we've never seen.
Right.
Okay. What I'm saying is it didn't. It broke. and it broke down, breaking well out and under the traditional trends. Now, this is a game of probabilities. It's not hard and fast, but we can start making some choices here. This Vanguard is a US market, okay? There's similar Canadian market ETFs. They're just not as closely followed, okay? So what I'm saying right now is I believe with the talk of interest rates, the talk of recession, that the market is taking into account that we may have on our hands a housing crisis in the United States. That's shocking. We're talking about times of inflation. We're times of low unemployment. We're talking about good times where everyone's got money in their pocket. If this trend is unable to break back into this, which it may, we might actually see some stimulus from the American government. That could be in the form of Federal Reserve Bank rates dropping again. But what are they talking about now? They're talking about raising rates, right? However, if we can get back into this trend, we continue on the path. My concern is right now that in the United States that we are going to bounce off this and we are going to head back down into the traditional pricing. Now, let me do a quick draw here. We're going to take a look at pricing and then what that would mean to the market, okay? So if this bounces off there and comes back down, gets support at the previous highs, right? We might continue and reverse. Great. If not, here's where we end up. So if we bounce and we pull back down, we could see a fall of the US housing sector of 27 to 30%. That's just by the charts, folks.
So how would that affect our house or the market?
So in Canada, the average housing price has run away, okay? So our charting is a little bit different, and maybe that's a talk for another day, but we're talking about recession, we're talking about rates, we're talking about all these things right now, okay? If we are going to be hitting a $1 million price evaluation on your home, and you have a 30% pullback in the housing market, that's a reduction of 30% of most people, but most people don't have a ton of portfolio other than their primary residence. And most people base their personal wealth, the feeling of how wealthy they are, off of how much equity they have in their home, how much do they have in their line of credit, how much cash do they have in the bank, okay? So if you see a 30% pullback down here, which would oddly enough test this area here as a support area, okay? It's almost like they know it's coming. What that's going to do is that makes a lot of people feel rather unwealthy, okay? That would actually solve our inflation problem. Inflation is caused when people think that they have too much cash and therefore don't care about prices. So they keep buying and buying and buying and buying and buying, right? So what we'd actually do if we saw a housing correction in the States, we would solve inflation. We would sop up the extra money. The best way I've ever heard this put is that liquidity that is brought in from the government in the form of stimulus is kind of like the oil on top of a good soup, right? It's good. It adds a little bit of flavor, but it can't stay there when you're serving it. You got to get rid of it. So whether you want to sop it up with bread or paper towel, however you want to get rid of it, it's got to go. And that's where we're at right now, folks, is that the US and Canadian governments are sopping up that extra cash that's in the market. And how do we do that the most efficiently and effectively? We pull it out of people's perceived personal wealth. And that's going to be your housing prices. I'm not calling for a major crash. I'm not saying that this is going to be catastrophic, but I think that you could see a 15 to 20% pullback that would slow the market growth. You got to remember that areas in Ontario had 30% growth last year, right? So if you saw a 15% reduction, you're still at 10% growth. Do you get what I'm saying? Like it gets a little crazy when we have inflation running the way that we are. But that's how you're going to soak up some of the liquidity out of the market. You're going to calm the market down, and you're going to be able to allow a new generation of buyer to come in. So again, folks, like what we've been saying here for a while now, we're finally figuring out the tech. We're trying to figure out how we can take some of the day-to-day issues that are happening in the world, relate it to follow the money, right? And this is a great example, I think, of where we can look at the housing market, what's coming in the future, and then we can actually start looking at some correlations of what's happening around the world. We've talked earlier about oil prices and the war in Ukraine. Now here we are talking about I think something that really hits home to a lot of people, everyone's got, young kids that are just getting out on their own, like James, for instance, right?
Absolutely. My son's looking at buying a house within a year.
Right. So if I was able to say to your son, hey, pal, take a look at this. What do you think? And break this down a little bit. And this is a video that you can share with them. Please do like, share, subscribe, because we want to continue supplying content to folks that allows them to make more informed decisions. I am not a financial planner. I don't know your risk portfolio, nor do I know James, and he's a good buddy of mine. I don't know. I can't be in his head. But if we can look at charting and we can look at the big picture on things, I think we can make a lot of money together, and we can probably also understand the world a little bit better.
And I think you can make an educated guess upon what he's saying, but, do your diligence, look at other videos, check into some other information. But if you can really match up what he's saying to what other people are saying. And I think if you take his advice and start looking at the real world stuff that he's talking about, I think you're going to understand it even more.
Absolutely. Well, pal, thank you very much again. Like, subscribe, and share. Send this to somebody who's looking at buying a house over the next little while. Again, a little bit different in Canada. We're a little bit overheated right now. If we were looking at the Canadian RSI, we would be way up here, I think, right? We're overbought. But what does that do? That usually market corrects. I think we've got a fantastic opportunity in the next little while as real estate investors. I'm looking very soon to head down to the States and look at multifamily properties and take my buddy James here with me.
Yeah, we're going to go together for sure. But we weren't going to talk about that. We don't want them to know.
Right.
That's keep between us.
Shh. Keep it
secret. You guys won't tell anyone, right?
Right.
Awesome. Right. Well, this has been Soaring Profits. I'm James.
Patrick, thank you again, folks. Like and subscribe and share, and we hope to see you soon at the next episode.
Absolutely. Have a wonderful day.
Hey, James from Soaring Profits and Pat over here. Aren't those two great looking cartoons?
Now, with that being said, folks, obviously we are not financial advisors, and we're certainly not your financial advisors. We don't know your risk tolerance. We don't know if you got money in the bank. We don't know what your situation is. So when we're having these discussions, we appreciate you tuning in. However, have some discretion. If you make $1 million with us, we're glad to have you. If you lose $1 million, that's on you as well, folks. Let's work together. Let's make some money, and we'll go from there. Thanks, guys.